All right, what's up, everyone? This is Cardano Stablecoins ranked from the perspective of a normal Cardano investor, like a normal retail investor. You don't know everything technical, you don't know everything about stablecoins. You're kind of looking at the pegs, you understand the basics of what's going on, and you want to know which ones to use. These are the ones I think you should use based on my opinion, based on my experience, based on what I've seen a lot of other people talk about. So, here we have it. We have USDA, we have MyUSD, we have JED, we have IUSD, and we have USDM. These are the 4 to 5 stable coins currently dominating the Cardano market, dominating what people talk about in Cardano, and they are the primary things people use. Now, we're going to rank them based on some basic things. We're going to have to make individual videos if we want to get super technical on how each one individually works, but we're going to cover the basics. We're also going to look at Ethereum, or not Ethereum, but USDC. We're going to look at USDC and how it performed when it first started as a stablecoin, because a lot of people look at Cardano stablecoins and they're underwhelmed. They're like, why should I use this? Or how is this going to compete with USDC and USDT? So I want to cover both sides of this equation, how Cardano stablecoins are actually flourishing into their own new beautiful thing. And I think in 2025, really capping off this cycle, they will have that opportunity. They need a few things. They need a little liquidity. They need some more reserve assets. They need some more time. And I want to show you how USDC also needed that time. But let's rank these things, because when you're in Cardano, if you make $1 million this cycle, you make that beautiful 100x, you're either going to take your native tokens and put it back into ADA, or you might even take that ADA and move it back into stable coins, or you might just sell into a bank account, or you might sell into Bitcoin. But stable coins are one thing that are going to be needed as people make more money, or as more businesses come into the ecosystem, or as we move treasury funds into, we start doing catalyst proposals or governance proposals, and people get paid out in ADA and maybe swap it to stable coins. So stablecoins are important. They're a necessary part of a thriving DeFi ecosystem. And I want to look at this as from the perspective of a normal user. When you're just coming into stablecoins on Cardano, what should you know? What are the basics, and which ones should you use for what reasons? Okay. So to start this out, the first one I want to talk about is USDA. It's right here, and it's automatically going to be a D tier. The reason that it's a D tier is it is the new stablecoin coming out from Emergo, and kind of this new thing that they're building or taking control of. It's not released yet. It's going to be a asset-backed stablecoin, much like USDC, and it has a lot of promising things, but it's not live. I don't think it's going to be live anytime soon. There's not really a whole lot of reasons to talk about it in depth right in this video specifically. It would need its own video, just because it's not usable. It looks like it's going to be a competitor to USDC, USDM, compete with those asset-backed stablecoins, but right now, not usable. Definitely something to look at, though, because I think it will be like an iteration of USDC, and something that Cardano can actually really benefit from. Next, let's jump into JED. JED is one of the oldest stablecoins on Cardano. It's an algorithmic stablecoin. It is over collateralized. So basically, algorithmic means it's run by smart contracts. And, as the price of JED goes up relative to its $1 peg, they will, sell and mint ADA and JED and use reserve stables of Shen and have all these different rates so that it incentivizes users to mint more JED or mint more Shen or have more reserve or all this stuff. There's a lot going on behind the scenes of an algorithmic stablecoin. Some things to know about algorithmic stablecoins is that they are not as capital efficient as asset-backed stablecoins. So let's imagine in Cardano you have $1 billion. If you want to take $1 billion, say you have ADA worth $1 billion, say you want to take that ADA and actually turn it into $1 billion of stablecoins. With an asset-backed stablecoin, you can take that ADA, push it into an asset-backed stablecoin, and you'll get $1 billion back. With a algorithmic stablecoin like JED, you will take that $1 billion of ADA, move it into the JED algorithmic, ecosystem via smart contracts. There will have to be an over collateralization of 400 to 800%. So in order to put that $1 billion of ADA into JED, you're only going to really be able to pull out, 400, 600 million pure dollars worth, because you need over collateralization. Well, maybe 400 to 600 is not the right number. Maybe it's like 200, because then you have 400% collateralization, which gets you to $1 trillion. So whatever you have in JED that is minted as dollars on the Cardano blockchain, there is reserves overwhelmingly exceeding that. And so when you have that collateralization, it's very, very secure for the stablecoin. And when you depeg, you have a lot of assets to get it repegged. But as far as capital inefficiencies, it does limit the size of what JED can become. So if you have $1 trillion in an ecosystem, maybe you can only have $200 million in JED, basically. And so that is a negative to it. The positives to it, it's fully decentralized. Nobody controls JED. It is its own platform, right? It's smart contract controlled, algorithmic controlled, and then users can get the yield from JED or from Shen and take the risk to earn rewards, basically, or get returns based on how those markets are playing out. Okay, so JED is going to be one of the only really fully decentralized stablecoins in Cardano, and if that's something that's important to you, JED is going to be one of the best options for you. As we look at these charts, or as we look at this tier list, I think it's also important to look at the charts and see where is liquidity pouring, where is, how are these stablecoins doing as far as peg. These are all the things I think normal retail audiences will want to look at or should look at. And so with this video being for the average retail investor using Cardano and looking for stablecoins, this is what JED is up to. Liquidity wise, third highest. Market cap wise, third highest. Fully diluted value, third highest. And so it's got about $2 million in market cap inside of its ecosystem, inside of JED available, which is kind of equivalent to having like 2 million ADA in the protocol, or if you use the over collateralization, depending on how much ADA and Shen is in the protocol, it could be much higher, maybe like $10 million, inside of the protocol. But JED has been doing okay on its peg. It's been doing pretty decent. It had a rough little start when it was first launched, but this is to be expected. And we're going to look at USDC as well to show how this happened for Ethereum-based or other ecosystem-based stablecoins as well. Some of the biggest stablecoins in our ecosystem, or in the crypto ecosystem that we have. And so JED did have a little bit of a rough start, but it looks like it is doing fairly okay with maintaining its peg. Some of the things I don't like about the peg is that JED is currently closing way above $1 and spending the next day above that dollar, or closing way below $1 and spending the next day below the dollar. I'm okay with these larger wicks, but like you can see today, we're opening and closing at about 98 cents. So there are still some things to be worked out with here. I have some notes down here, and basically what I think JED needs is more liquidity. I think while it is capital inefficient, if we have more liquidity, the amount of JED available will limit this kind of buying and selling pressure between $1. So if we have, a couple million more JED in circulation, me minting or me using JED, me buying JED, me selling JED will not affect price as much compared to if we have less JED in circulation. Every mint or every trade of JED affects the total market cap of the JED available much, much higher, to a much higher degree, a much higher percent. So this is a pretty good stable coin, right down the road, really average and doing really well, doing what it's expected. It also has a similar stable coin. The exact same logic is on Ergo with Sigma USD. And so I like JED. I think it's if you are interested in decentralized stablecoins, this is going to be the best one for you to go with. I think this is a classic B tier stablecoin, a really solid option. And if you're looking to hold a stablecoin long term, like for weeks or months in your wallet, I think JED is a solid option to go with. After JED, I want to go with everyone's next favorite stablecoin, USDM. Now, USDM is a asset-backed stablecoin. It's basically a USDC clone, but on the Cardano blockchain. And so what happens is USDM can only be minted by businesses, just like USDC is only minted by businesses. Regular retail users can't mint it, but regular retail users can use it by getting it on a decentralized exchange and swapping for it. Okay, so USDM has fiat-based asset-backed reserves that are reported on and regulated daily. So while USDM is not decentralized, it's very centralized. It's owned and controlled by the company Moneda that owns and controls it. They are audited very, very heavily to the same kind of standard as like stocks, bonds, FDIC insurance, stuff like that. So they're audited, they're reported on daily. So while they're centralized in functionality, they also have a lot of things going for them and going for us as users to keep them from doing harm. So USDC is a classic asset-backed stablecoin. It is basically just like USDC, and everybody knows how simple and easy USDC is to use. Now, when we go look at the liquidity and the market cap, USDM is leading the charge in every single category. High liquidity, high market cap, high fully diluted value, and it is really kind of the leader of Cardano stablecoins currently. It has not been around a while. It has been around much less time than something like JED, but you can see it's kind of doing the same thing JED is doing. It has like this is like a whole week it was below peg, a whole week above peg, a whole week below peg, a whole week above peg. So and currently today it's really not doing quite great on its peg. It's at 98 cents. So we're close. I mean, we're kind of close there, but just not close enough. And from my research, basically what is wrong with the peg here is that it's lacking liquidity. There's a lot of demand for use, and then there might be a delay in redemption. I'm not 100% sure how fast redemption occurs, but like when the businesses who supply for USDM, if they ever want dollars back or want to redeem their stablecoin back for dollars, what is the delay there, right? And so that's a question I have. But basically what we're seeing is a lack of liquidity, I think. If USDM had double the liquidity, each buy or sell of USDM would not affect price as much, and therefore stability would be closer to $1. So basically, increasing these liquidity pools on each DEX or on each DEX aggregator, increasing the amount of liquidity of the stablecoin in the ecosystem, I think that would be very beneficial for USDM to kind of keep it closer to its peg. Because right now, it's okay, it does well, but it is bouncing a little bit too far away from these zones. It's close, it's getting there, and I think in 2025 and in time it will get there. But because USDM is so simple, so close to USDC, so close to kind of the unique experience that users want in simplicity, it's leading a lot of the Cardano charts and has quickly outpaced other stablecoins in the ecosystem. This to me is an A tier. This is, if you want to have a stablecoin in your wallet for a long period of time, this is the stablecoin I would go with. Either USDM or JED. These are my long-term stablecoin holds if I wanted to trade my ADA for stablecoins and leave it there for a couple months while the market cools off. These are the only two I would trust to do that. Next, let's go to IUSD. This is Indigo Protocol's stablecoin, and these two, IUSD and MyUSD, are synthetic stablecoins. So basically what it means is they use other assets to peg themselves to a dollar. MyUSD and IUSD, though, are kind of really dissimilar in how they use synthetics. IUSD is going to use a collateralized debt position, which is basically like taking a loan in DeFi. When you take a loan in DeFi, you put ADA in as collateral into the smart contract, and you get back like 50% value or 40% value or 60% value in order to have a healthy loan, right? And then if your loan goes below the health limit or into the liquidation threshold, your loan is closed, you lose the collateral, and you keep whatever you have, right? That's how these DeFi protocols kind of secure themselves and keep themselves safe and afloat. IUSD works the same way. You put money into a collateralized debt position. Say you put $100 worth of ADA into a smart contract on Indigo Protocol, and you mint out IUSD. Well, because it has that health factor, that health ratio, the liquidation threshold, you can't pull out $100. You can pull out $40 or $50. And the problem with IUSD is that it's very capital inefficient, and when you put $100 worth of ADA in, you can only ever pull out like 50 real stablecoin dollars. So it's just locking up ADA. You're not getting a lot of dollars, and it's diluting the amount of money in the Cardano ecosystem. So this is a synthetic stablecoin. It's going to be at C because of this, but it's still, I still think that there's a great future potential for it. The problem with IUSD is that it's struggling to maintain its peg, and from in my research, it's struggling to maintain this peg because, again, there's not a ton of liquidity for stablecoins in the Cardano ecosystem. These CDPs, collateralized debt positions, are capital inefficient, and it's locking up ADA in these unusable ways. That's really just not helping the ecosystem. And so it kind of has come down a lot from its peg, and it really hasn't been able to maintain peg since about October 2023. So it's been about a year almost. And so it's just a lot of people are not going to use this stable coin, although it was doing okay at the beginning. Right now, it's just struggled to be at its peg. And when you're a retail user, this is pretty much the only thing you look at. You look at this chart and you say, well, it's not close to its peg. I'm not going to use it. And so that's basically what's been happening. And so IUSD is unfortunately going to be a C tier because of that, because it's just not maintaining its peg. And I would probably not recommend using it when you have other options available to you. Lastly, this is one of the newest stable coins in the Cardano ecosystem. It's going to be MyUSD. It's made by the Mint team, and MyUSD is also a synthetic stable coin, but it doesn't exactly work exactly like IUSD. There's no collateralized position. There's no collateralized debt position. I think if I am speaking correctly, what Mint did is they sold NFTs, did like a fundraising event, and whoever has NFTs gets these bonuses now. But they sold NFTs, raised money, and then used that as a synthetic position to start getting USDC and USDT and now USDM. And they're holding that in a position which then allows them to mint a certain amount of MyUSD out into the open market. What's really interesting about the Mint protocol is they are the most stable coin on Cardano currently. They also have what's called a stablecoin insurance. So if USDC or USDT or USDM, any of their backed stablecoins that's fueling the price of MyUSD, if any of those collapse, they have this stablecoin insurance system to where it will help repeg the stablecoin back to $1. So this is very interesting. And when you look at the chart, MyUSD is one of the smaller stablecoins on Cardano currently, just because it's so new. I think currently ranked number 4. Liquidity about 200,000, about 2 million market cap, 2.5 million fully diluted value, kind of right behind Jed here. But MyUSD, what's so important about it is how well it's been doing with its peg. What I like to see is that very few days are 100% closing above and below the $1 mark, but you can see how it is maintaining a peg very, very well. I think what could help MyUSD is, again, just more liquidity, more money into the ecosystem of the Mint ecosystem that they can use to then put out more MyUSD into the ecosystem, into all stability pools or liquidity pools on DEXs, and that would allow people to make a trade and not impact price so much. When you only have a $2 million fully diluted value, if somebody comes in and does a $100,000 trade or a $200,000 trade, that's 10% of all the stablecoin in the ecosystem. So that's not a whole lot of money. $200,000 is 10% affecting, this peg, these prices here. And so really what these stablecoins need is just more money in their ecosystem, in their liquidity pools. Let me check out what I wrote down here. But yeah, Mint is just it's very interesting. The big thing that I would say about MyUSD is it is not decentralized at all. It also has no reporting, no audits that I'm aware of. It's a very good product, and I really like the team. I like talking to them on Twitter. I like watching them. I like what they're doing. But in the back of my mind, or in the back of other people's minds, I've heard that you need to be careful because MyUSD is not decentralized. There's no audits. There's no reporting. There's no real good metrics on how much money they have, or how much USDC is backing MyUSD, or how much USDT is backing MyUSD, or how much they hold of USDM, or what their reserves are. And it's not their job to really share it with us, right? We're just retail. They're running a business. They can do whatever they want. But as retail, we need to recognize, what are our options here? What can we do? What should we take note of? So for me, MyUSD is probably going to be right here next to Jed as a B tier stablecoin. I do kind of wish MyUSD would make it into the A category, but I think in order for it to get into the A category, I want to see a little bit more either metrics and reporting on reserves to kind of see like what's going on behind the scenes, or I want it to be decentralized so we can kind of trust it more. Not that I don't trust the team, not that I don't trust what they're doing. It's just we always got to watch out for ourselves here in crypto. And I actually didn't know it was kind of running in this manner until someone pointed out to me the other day on Twitter. So I'm very appreciative of that. But yeah, MyUSD is very interesting. Synthetic stablecoin that's really holding its peg quite well. The big thing you want to watch out with MyUSD is that it's just got those safety risks behind it. And so my opinion is that there is no S tier stablecoin on Cardano currently. I think we need a lot of liquidity. We need a lot more battle testing and a lot more features for that to happen. So that'll have to wait till 2025 to see if we actually get an S tier stablecoin. But I think most people right now would say USDM is one of the best stablecoins on Cardano. And I've flip flopped my opinion between these two. I originally thought MyUSD was the best on Cardano, but given just risk or given just time or given anything, I think if you're going to pick one and only one, USDM has to be your best bet. Now, I would say if you're doing a short-term trade or if you are buying for this reason or swapping ADA to a stablecoin to do something else with it, you're not going to be in a stablecoin for more than one day. I think USDM then becomes an A tier. Given your time frame and your use case with the stablecoin, MyUSD can become an A tier in my opinion. In general, for everyone who's going to turn ADA into stablecoins and leave it in their wallet for a few months, MyUSD becomes a B tier. Okay, but if you're going to swap and just do some cool things, MyUSD has a lot of cross-chain swapping functionality. So if you're going to do these cross-chain things, or if you're going to do a swap that's then going to be in a stablecoin and back out of a stablecoin within a day or two, and you're not going to be holding a stablecoin for a long time, I think MyUSD becomes A tier then. So that's just my opinion. That's what I would look out for. I want to relate this all back to USDC though. You can see today, this is the USDC dollar chart. Here we are in 2024. This is a daily chart of USDC. USDC is doing fantastic. Look at how close that peg is. Look at how beautiful that is in line with our yellow $1 line. USDC is a monster and it's doing great. What is very interesting to look at though is how did it perform when it first came out into the open market? You know, everything can do well when it's got billions of dollars behind it, but how is it doing today? That's what I want to know. And so if we zoom back out here to 2021, this is the start of USDC. And I just want to show this. I just want to show this because I want to relate it back to Cardano's current situation. And really, we're just building stablecoins on Cardano. But look at this. USDC closing above and below $1. Look at this massive candle. USDC closing above and below $1. Look at this. USDC spending days above $1. It's not a lot above $1, 1.001 or something, but it's still above $1. Look at these massive candles. And when we come into the year, USDC spending more and more time above and below, above and below, above and below. And so what I think we can take from this is that Cardano, yes, stablecoins are just getting started. They're not always 100% on peg, but a lot of stablecoins started out this way. And so I think this is the natural journey, natural progression of Cardano stablecoins. And I think what we can do as ecosystem investors is do our best to support stablecoins, support the ones that we like, support the ones that are doing interesting and cool things, and then try and boost liquidity. I think that stablecoin liquidity would be a great thing to use the Cardano treasury for, even if it's just like 1%. 2%, 3%. Not a lot of money needs to go into these things to double them or triple them, right? Which would massively improve the Cardano ecosystem and just provide more options and get more eyeballs and do more great things. This is how I think about Cardano stablecoins. This is what I think is the ranking in my opinion. JED is the best decentralized stablecoin on Cardano. USDM is just the overall best stablecoin on Cardano. MyUSD is the best. Is the most stable stablecoin on Cardano, but does have a few risks. So if you're going to use this, I wouldn't hold it in your wallet for more than a few days. These are my rankings of Cardano stablecoins. I'd be curious to know in the comments if you agree with me or if you disagree with me or if you think I'm totally wrong. I'd love to chop it up in the comments with you. Also in the description, if you're still watching the video, we got our Crypto 100x blueprint checklist. I've been talking about this in the past couple of videos I've done. It's my strategy to 100x my portfolio this cycle. If that idea interests you, check it down in the description. I'm sure you'll love it. All right. Other than that, I hope you enjoyed the video. See you in the next one.